I just feel I'm not bullish enough because things just keep happening faster and faster, far faster than I predict them to be. That's kind of why I predicted 1 million, because I'm front running my own model. We haven't published it yet, but I have a price prediction model. We put it together a couple years back because we needed some price model. But I think because things happen faster in Bitcoin, we've had nation states adopt Bitcoin. We have massive institutional and corporate adoption at this point. I just think everything happens faster. So I'm front running my own model and saying, we'll hit it sooner than that, like this year, next year. We're orange filling people. We're getting people to take Bitcoin. But what are we actually ending up with on the table?
Samson Mow and Michael Saylor issued the biggest warning of 2025. To all crypto holders and buyers of BTC, they say this is crucial for the months ahead. Saylor believes Bitcoin is about to make history, as we witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. With thousands of corporations across the United States now buying Bitcoin, the demand for the leading digital asset has increased exponentially and would serve as the gateway to substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Saylor envisions that this development will pave the way for large corporations to incorporate cryptocurrencies into their balance sheets. Let's get right into the latest interview with Michael Saylor, as he predicts that Bitcoin is poised to revolutionize cryptocurrency in the fourth quarter of 2025.
If I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement, because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. And the same with BTC-backed credit. That's a very powerful dynamic. And once that starts, that burns 100 million a week per company. That can burn billions, and that could be billions of dollars a week. Then that market's going to go from 250 billion to $1 trillion to 2 trillion to 4 trillion to 10 trillion. Most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it. That will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, the base network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. Look, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families? I think in the modern world, the best conception of money is that money has a medium of exchange component and it has a store of value component, and you have a unit of account for the store of value and a unit of account for the medium of exchange. So the right metaphor is just think of the dollar versus BTC, or checking account versus savings account, and so you're going to have sort of high speed dollar type instruments to price things in day to day. And then you're going to have another capital asset that you're going to use to store your value over the course of 100 years. Like, I don't run a country, so no one's asking me, but I think it would be a mistake to try to establish a currency with a capital asset. For example, you don't really want to price all your sandwiches in New York City real estate. Nor do you want to price your sandwiches in ounces of gold, nor do you want to price sandwiches in Picasso paintings, right? I think that you've got capital and you've got currency. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar, or the Naira, like something which is inflating at 14% a year or 30% a year. I think you've got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency. It's not a weak currency. It's a capital asset. I think that you have a few currencies that are kind of pegged to the dollar that are struggling on, and I think you have a lot of currencies that are collapsing against the dollar, and then you have the dollar. And so if the stable coins succeed, and they're going to succeed, and then U.S. corporations and banks are able to issue stable coins backed by U.S. dollars, and you have to ask the question, who's going to be buying it? And the answer is people that might have otherwise had rubles or CNY or every African currency and every South American currency. So I think the weak currencies of the world are going to gradually be marginalized. And I think that the dollar will grow. I think weaker currencies will be marginalized. I think that there are 400 million companies in the world, and there's 40,000 big banks in the world. So I think that, and of course there are lots of institutions. So I think that as Bitcoin is integrated into the fabric of the global economy, I think you'll see, how about 1,000 banks that are actually trading peer-to-peer with each other? I think that the banks, the custodians, megacorps, I see a world where every major bank and every major tech corp, maybe a Google and an Apple and a Microsoft, they're all settling or moving large amounts of Bitcoin around on the base layer. Governments, you would think that the biggest users of the base layer would be Apple and Google and the US and Bank of China and Bank of Russia and Bank of England. To the extent that any of those things exist, right? If the nation exists, if the bank exists, you would think that Citi would be moving billions of dollars of Bitcoin to B of A, to Wells Fargo, to Santander, to Deutsche Bank, to Swiss Bank, to Bank of Japan. I would think that Microsoft will move billions and tens of billions of Bitcoin between Microsoft and Google in order to work through some, technical issue. I think I think Visa and any of the payment networks, they'll have massive amounts of Bitcoin. So I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate.
Saylor confidently predict that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Saylor reassure that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
And I think the network's going to scale in the layer 2s and the layer 3s. I think the Lightning network is going to end up being a high speed, high frequency, lower value settlement network that will stitch together 100,000 or 1 million websites or 1 million mobile apps. Or you could imagine everybody with a mobile app that has payments built in. At some point, they might go peer-to-peer. They won't do it on the base layer. They'll do it on an open protocol layer 2, most likely. And then there'll be like massive competition between Coinbase and Cash App and all the traders and the banks and the high frequency, traders and the next person running MasterCard or Visa. And they'll try to create these layer 3s. And they'll have a layer 3 protocol, and maybe Binance wants you to move it on Binance, and Visa wants you to move it on Visa, and Coinbase wants you to use their network, and Cash App, and then Microsoft and Apple Pay, and all these other tech networks. They'll be layer 3s, and if 1 billion people trust Apple with their credit card. Maybe a billion people will trust $10,000 worth of Bitcoin to Apple. And then maybe there'll be some successor to Apple, right? Like Tesla bot or something. So I think that there'll be a huge amount of transactions, billions and billions of transactions a day, probably billions an hour on the layer 3s, probably billions a day on the layer 2s. And then you're going to have the same number of transactions, on the layer 1, far fewer. And those will be $100 million, billion dollar type settlements between the mega institutions. And I think you'll probably see Bitcoin security and Bitcoin credit type ideas built into a lot of financial and technical applications. And there'll be new applications, new use cases that we can't even conceive of right now that will maybe for cybersecurity or social security or something else that will grease the wheels of digital commerce. I think the most exciting thing going on right now is the issuance of BTC-backed equity and the issuance of BTC-backed credit. Because, you're talking about $100 trillion of equity and credit that's discretionary. So that's a very powerful dynamic. And once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week. And the same with BTC-backed credit. If you look at all the credit instruments, all the preferred stocks, all of the fixed income, all the annuities, all the corporate bonds, all the high yield bonds, the junk bonds, all the investment grade bonds, all that huge amounts, it's all going to be recapitalized or reconstructed on a Bitcoin standard that's bigger than the equity. And so I think that there's a digital transformation of the capital markets going on right now. And it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common.
Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.